It's about that time of day again. My name is Joseph. Monday evening, September 24th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is bullish with a spike and range pattern this evening, and that tells me to look for seller failures using the 2-try rule for reliable buying opportunities below the range tomorrow morning. The S&P is range bound and rotating off the low of a trading range tonight, and looking to buy the low using a key support trend line on Tuesday. Nasdaq is also bullish and running back to Friday's big round number, and I have my eyes on buying opportunities near the low of a key bull channel tomorrow. Gold is range bound and rotating off the high of the range this evening, and I'm looking to use buyer failures for selling opportunities back down to retest last Friday's low. The euro is range bound as well, with a spike in range pattern tonight, and that tells me to look for buying opportunities using the 2-try rule below that range tomorrow morning. Well, we're back in the action for another big week of trading opportunities on our nightly newsletter. We got some strong trends, some trading ranges, and of course, a solid plan of attack for Tuesday's trading session. But before we jump into those charts and put the plan together, I need to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at Sideways Markets. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing, and don't forget to hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day. This is where we publish everything on our blog every day. I'll put all the links in the description of this YouTube video. While you're here on the blog, don't forget, join the mailing list in the upper left-hand corner. That way you never miss another great video. Follow me on social in the lower left-hand corner. I'm always posting charts, links, quotes, videos, all kinds of great content you won't find anywhere else on the interwebs. Download all the charts from tonight's video, have them ready on your computer. There's a link right below the video tonight on the blog. And don't forget, if you're not a member here at School of Trade, I've got a great free pass for you to come out and join me as a guest in our trade room. And if you have any questions, there's always live support on the right-hand side of the website. Boy, it feels great to be back with you guys and gals. A restful weekend under our belts. Hope you guys spent some time with family and friends, maybe a little bit of football, right? American football, obviously, right? Some great games this weekend. But we're back in the action, though, right? And as always, I can remind you guys, we're only as good as our next trades. We're ready to get ready for, right, another big day tomorrow. Tomorrow's Tuesday, September the 25th. We don't have any major news on the calendar tomorrow. We do have, as you can see, the top of the list there, the beginning of the 2-day FOMC meeting. Now, that's not going to be that big of a deal tomorrow, but that will come into play at the end of the day on Wednesday. So we'll talk more about that as we go. So FOMC starts tomorrow. We got some minor news, the Case-Shiller home prices, the price index, consumer confidence. So it's not a lot going on here between 9 o'clock and 10 o'clock. But we do want to keep our eyes open, though, because as always, 10 o'clock Eastern time is usually where you're going to get some of the biggest opportunities each day. So no major news tomorrow. We do have the beginning of the FOMC announcement, or the FOMC meeting, which won't impact us until late in the day on Wednesday. And as you can see, we cram all the good stuff into Wednesday, Thursday, Friday this week. We got new home sales, FOMC on Wednesday. We got durable goods and GDP on Thursday. And then don't forget, we're going into the end of the month here, into Friday's personal income. And of course, you know me, right? Anytime we go into the end of the month and the end of the week, we've got some fireworks expected later on this week. So it's setting up to be a pretty good situation this week. We got some big news from the FOMC. Again, lots of new home sales stuff, GDP, and of course, the end of the week and the end of the month on Friday. So definitely looking forward to a great week here. And of course, don't forget, tomorrow, no news tomorrow morning, right? But we will definitely be starting to see that news coming to creep in here Wednesday, Thursday, and Friday. So big, wide open space tomorrow. Don't forget, we'll put the plan together tonight, and we're going to execute that plan together tomorrow morning in our trade trade rooms. Let's grab that right now. Grab those charts. And let's see what the plan looks like for Tuesday's session. Crude oil is bullish with a spike in range, a spike in channel, a measured move, and a reversal line on the chart this evening. Now, first of all, the big clue here is the bull bias going into this trading range. You can see I've highlighted this really small. It's a very small range. You could look at it a little bit wider here, but that would be inaccurate. It is a trading range here. And of course, that trading range has a bull bias to it, right? That bull bias tells me to look for buying opportunities at support levels below the low of this trading range. So we know we want to buy low right now. I need to find some levels of support. So we want to buy at support in a bull market. As for support levels, I have this hidden channel we're drawing up, right? This will act as a support level. I have the range expansions. That will act as a support level. And I also have this reversal line down at 71.40, right? And that will act as a support level. So we're looking to buy at support below the low of the range. I like the fact that we have this trading range. I can take that range, copy and paste it down. That gives me support. Copy and paste it up. That gives me resistance. And look, as you can see, we can combine that range expansion along with that reversal line at 71.40, and that really becomes an excellent area there for us to be a buyer. Now, if we do go higher, I will keep an eye out for this to become a channel. But as of right now, it's really more, it's 80% range, 20% channel. That channel I don't think is enough just yet to call this a true channel, because you can easily see, right, for example, they're definitely paying more attention to this as a range than a channel. So for right now, we'll trade the range first, but if it keeps going higher tomorrow, we'll really have no choice here but to look for this as a new bull channel. So what's the plan? The plan is to wait for price to pull back to support, let those sellers try to reverse it, and look for those buyers going back higher. I want to buy as the market pulls back. I want to buy below the low of that range. And to do that, in a range-bound market, we always look for what I call the two-try rule. I'm waiting for a pullback down to support. Again, I've got range expansion support. I've got reversal line support. So pulling back to support, that's going to be the first try for the bears. Then I'm going to wait for a pullback to the moving average. Now that pullback to the moving average is likely going to be seen as a selling opportunity for those bears. I'm going to wait for those bears now to try their second attempt to go lower. Again, I call this the two-try rule, or in this case, it'll be called a two-try failure pattern. I wait for the bears to try once, pull back to the moving average, bears try again, and then we know all the bears are in, right? We know those bears now are in this move. So as we see it try once, try twice, now we know where the stops are. And now we can go hunting for those stops. Remember, the market's bullish. It's not bearish. So the odds of this market going lower aren't as good as the market going higher. So I always want to be on the side of the odds, right? I want the odds in my favor. So when I see that two-try rule, when I see the bears try once and try twice, now I can wait for that second try to fail, and I can look for that run going back up now to retest that high. Now, that's the basic principle of the two-try rule. I'm waiting for that strong run down. Get those sellers to come in and try to sell that pullback to the moving average, right? That's one try, two try. Then we know the bears are in, and now we can go looking for a chance to buy into their stops. Buying below the low of that range, I can look for a buy coming off that low, two-try failure. And then as long as I'm not buying into the high of this range, right, as long as I'm not buying into that 23 area, I can then look for a hidden channel pullback. Draw the trend line here, bring it up from this low, and now look to buy off the low of that channel. So I call this, in a range environment, I call this a two-try failure into a hidden channel pullback. That will allow me to buy low at support below the low of that trading range. Now, what if the market sits here going sideways? What do we do then? I'm going to have to sit on my hands, and I'll wait for that one try, two try, break back up. What if we go higher here? What if we keep rallying higher? Well, if we rally higher, it really all depends on what happens in this area right here. Because remember, we have that trading range. I've projected that range up to 53, and you can see they already held that range expansion resistance already once. And so that range expansion resistance, right, I don't want to buy into that. So what I'd like to do is make sure we actually get that strong rotation higher, and then we'll look and see what we get from there. We may get a nice move up, pull back, and a chance to buy down around the low of that channel tomorrow. That would be ideal if the market doesn't pull back for us now. So if we come out tomorrow morning, we see a nice strong run higher here, I'd love to buy the low of that channel. I just have to wait patiently and see if we can get it. Now, this market's been pretty jumpy today, and we'll see tomorrow might be more of the same. We may also get a spike into a channel. In other words, kind of a new channel up here. So watch out for that new channel. If we do get that spike in channel, keep your eyes on the base of that channel, because that's typically where you're going to get the best buying opportunities on that spike in channel pattern. Now, last but not least, how do we reverse? We know we want to look to buy the pullback. One try, two try, back up we go. We know if the market goes sideways, we're going to wait patiently for that one try, two try, and then buy up from there. If it goes higher, we're looking for either that rotation back down to buy the low of that channel, or we're looking for a new spike in channel right as we go higher. What would a reversal look like? It looks like a 1, 2, 3 reversal, right? 1, 2, 3. First, 1. Second, pull back to the moving average, and third is a strong move through. I call this the 1, 2, 3 reversal. And there's an exclamation at the end of this term, and that's because that third leg lower, 1, 2, 3, that third leg lower needs to really pop off that moving average. Once we find that third leg lower, then we can find a new channel, draw off the top of that, right? Find that new channel, drawing off those lows, bring it back to that high, and then we can look for that sell up around the high of that channel using those prior swings as resistance. Target for the bears, you got it, back to fill that weekend gap. Now, weekend gaps, right? We got a couple of them on the chart this evening. Nasdaq filled their weekend gap. S&P hasn't filled theirs, and neither is the crude oil. Weekend gaps are not guaranteed to close immediately, but I will tell you, most of the time, we do see a weekend gap filled before the end of the day on Thursday. It's usually within the first 3 days, Monday, Tuesday, or Wednesday. So the writing isn't quite on the wall yet for this weekend gap to get filled, but look for it if those bears can take control in tomorrow morning's session. So for now, we're buying those lows, looking to take our profit back at the high, right? And don't forget, if you want to learn more about these 2-try rules, right, these hidden channel pullback patterns, I've got a great free trading course that I'll link up right in the upper right-hand corner here for you. If you're brand new here today and you want to learn all the details of all the patterns, the strategy I use, and literally see hundreds of examples of these patterns on real charts, make sure you grab that link. It'll pop up there right in front of you. Grab that free trading course. It's linked up also in the description as well. Make sure you register for that free trading class. That way you can get the most of our time every evening on this nightly newsletter. Let's keep going. Next up here, we go from crude oil over here now to the S&P. The S&P is bullish with a trading range, a support trend line, and a weekend gap on the chart this evening. The trading range, in my opinion, is the big clue, and you can see with our range expansion levels holding as support, we can now assume that the pendulum swing is back in the opposite direction, which is going to try to fill that weekend gap up around 32.25. There's the trading range. We spent the first 2/3 of the morning this morning. We then took that trading range, we projected that range expansion down, right? That gave me that range expansion support. You can see they held that support level like it was rock solid down there, and now here we are rotating back higher. So where's the objective now? Well, we take the amount of the move below the range, project that above the range, and now that target becomes at 29.35. Okay, the problem is we're right in the middle of the trading range, right? I don't want to buy the middle. I want to buy the low. I want to buy its support, right? We try to stay away from the middle. So my plan to buy its support is let's use this rising support trend line. Let's look for a buying opportunity off that rising support trend line instead of trying to buy as the market's going higher. Let's buy as the market is going lower. So again, the trading range is the important clue here right now on the S&P. We've got that range. The pendulum swings down. I'm looking for that pendulum to swing back up here now, and I want to be a buyer. Right? Where can I buy? I want to buy at support. I've got my support trend line, and I'm looking for that pullback. Now, you can anticipate this. As we pull back, we're probably going to be below the moving average. When I'm below the moving average, I like to look for patterns, which I call the two-try failure pattern, which looks like this. One try, pull back to the moving average, two tries, and failure. Now, there's a couple patterns we can look for here. Keep an eye on that swing at 22 3/4 because this could easily turn into a trap, into a two-try failure. Two-try failure, of course, coming off that moving average, and then into a hidden channel pullback. So very, very easy patterns you can see. Just got to wait for the pullback. So first things first, we're looking for a possible trap low, right? That trap here will come below that prior swing, trap low pattern, into a two-try failure pattern, into a hidden channel pullback pattern. And again, I realize if you're here for the first time today, most of this terminology will be completely over your head. So that's why I have that free trading course in the upper right-hand corner. So pause the video if you need to, right? I'll be here when you get back. Grab that free trading course in the upper right or linked up in the description, right? And I'll see you on a video series where I'll teach you, again, how to use all the tools, how to find all the patterns, and I'll send you hundreds of examples of what those patterns really look like on real charts. So that's the plan if price pulls back. What if price keeps going sideways here for us on the S&P? If it goes sideways on us, then we'll have a bull bias into a trading range. If that's the case, we look for that two-try failure. One try, two try, and back up we go. What if we go higher here? Right? What if we just run higher here right now? If we run higher, and you'll see the Nasdaq in a second, the Nasdaq is giving us a little bit of a leading indication of that. But if we do see a short covering rally, if the pendulum really swings hard, well, now I'm going to start looking for a little bit more aggressive channels here. So if we start looking for a move higher here, then I'm going to look for a new channel. And again, I don't really know what that channel will look like right now, but once I have that new higher high up here, then I can draw my channel off these two highs. I can bring it down to that low, and I can now look for that pullback now, right, to buy the low of that channel, right? And again, when we pull back to that low, I'll look for trap patterns, two-try failure patterns, pullback patterns, and again, you can see many, many more examples of those patterns by grabbing that free trading course that's linked up in the description. Now, last but not least here, how do we turn bearish again? What would a bear market look like? Well, in all reality, if we can get back down to retest this low, that will go a long way to giving credibility here to those bears. The problem is, though, if we do go back down to that low, it doesn't guarantee we're going to keep going. So it's going to be a difficult spot here. Buyers are definitely going to want to be buying in this area here. So I think the only way you can really sell this market is if we can get a strength, a pullback, and a strength that goes literally right to that low. Because anything else besides there, I really can't justify selling into that low right now, and there'll be too many buyers waiting down here to try to pick the pockets, right, of these bears. So for me to want to be a seller right now, I'm going to have to look for that strength, pull back to the moving average, strength off the moving average. We call those the 1, 2, 3 reversals or 1, 2, 3 breakouts. Then I find that new bear channel by drawing off the low, up off that high, and I'm looking to be a seller right off of that high. Now, if that's the case, right, then we have this big monster measured move, right, and we're targeting now this next support level down here which is just above that 2900. So 2908, 2906, this area right in here, that will likely be the short-term objective for those bears. The bulls have it pretty easy. The bulls want to go back up and retest that 2932 to fill the weekend gap, right, where Friday's session closed. That's the weekend gap. And then from there, right, possibly all the way up to retest those highs at 29, right, 44 and 3/4 tomorrow. So tomorrow time will tell how far we go. But for right now, though, I'm looking to be a buyer with those seller failures down in that battle zone to buy the low of the range and run this puppy back up to retest those highs. Let's keep going. From the S&P now over to the Nasdaq. The Nasdaq is bullish with a trading range, bull channel, and a measured move on the chart this evening. The market's clearly bullish, recently testing this measured move resistance. So I'm looking to buy at support. I really don't want to buy at this level of resistance. You can see this measured move here, 1 and 2, right? We're sitting right at that measured move. So the market's bullish. I don't want to buy at resistance. I want to buy at support, right? And what support levels could we use here? Well, I've got a channel drawn off of these lows. The low of that channel will act as support. If you look left here, I've got the top of that prior swing along with the low of that prior swing. We call these reversal lines at 64.25. I also have a reversal line here. Now, if you look closely at these, this high at quarter did not get retested by that low at a half. Right, 46.25 was the reversal line, 46.5 was the pullback. So that reversal line at 46.25 is still in play here. The bottom line is we're bullish, right? I want to be a buyer. I want to buy at support, buying off the low of that channel, but I'd really like to buy in that battle zone. That would really be where we can get that nice deep pullback, right, and get that rally going back up higher. And as you can see, and again, that's why I said this could be a little bit of a leading indicator for the E-mini S&P, right? The Nasdaq has already finished filling its weekend gap, right? Didn't take very long for the Nasdaq to fill the gap before lunchtime today, and we're hunting now for that trading range, right, that we came out of on Thursday into Friday's big collapse off that high. So we have to assume that big round number at 7,600 is a preliminary target. And then obviously the top of that range up here at 32, we'll call that 32.5, 32 3/4, 33-ish, right? That becomes our big objective for those long-term bulls tomorrow. The bulls have control. I want to be a buyer. I want to buy at support. And I really want to do it before we get back to that big round number, preferably. How do we do that? Well, what if the price pulls back? Hopefully we get a nice pullback like this one, right? Where we came back, we pulled back, the bears tried once, the bears tried twice, and we get that pop, right, into that pullback going higher. That's the same basic pattern I've described already a few times. I want to see that pullback, bears try it once, pull back to the moving average. Here the bears try again, right? That'll be our 2-try rule, very similar to there. 1 try, 2 try, right? 2-try rule. Once we have that 2-try rule and play off the moving average, then we know the bears are all in, and now we can look to buy into their stops. When you buy in a bull market into counter trend seller stop losses, they usually get out pretty quick, and you'll see an aggressive move higher, much like you saw, right, in that late morning rally going higher earlier. So remember, we don't want to chase after that move. We want to grab that new channel, find that new channel, and buy off the low of that channel. So again, we call this the 2-try failure, the 2-try rule, 2-try failure into a hidden channel pullback, right? That'll be an easy way for us to capitalize on this move going back up to retest the high. What if we sit sideways up here, right? What if we sit sideways right around this measured move? Then what do we do? If it's a range with a bull bias, we look to buy below that range. 1 try, 2 try, back up we go. Let those bears try once, let them try twice, back up we go. What if the market keeps going? What if we keep going? If we keep going here, just watch that channel rotation, and we'll look to buy the low of that channel. Remember, this momentum is way too strong right now. It's not going to stop just because we get to that big round number. We may go sideways here for a bit, and we got a good plan for that using that 2-try rule. But again, if we keep rolling higher here, well, at that point now, I've got my support levels identified. I'm going to look for that pullback and look to buy off the low of that channel. So that's the plan. If price pulls back, if price goes sideways, or if price keeps going higher. What does a reversal look like? Well, you know me, right? I always wait for that 1, 2, 3 reversal. Number 1, strong move down. 2, pull back to the moving average. And 3, a strong move off the moving average. So you can't just trust that first pullback off the high, because if every time we saw a strong pullback the market reversed, well, there wouldn't be any money left, because there wouldn't be any edge for having that knowledge to stay with the trend. In other words, momentum is too strong to the upside. I'm going to have to wait to get some follow through off that moving average, because if they don't, what's going to happen? It'll fail and run back up. That's one of the easiest trades you're ever going to get in a trending market. So I'm looking for that sell, right? Those sellers come in and run the sucker off that moving average. Once we get that, then I can draw my trend line off those lows, bring it up to those highs, find that new channel, and I can look for a sell off that channel high. And again, targets now back down around those Friday lows, right? Back down around those lows from previous sessions. So the target for the bears is back down around that 74.70. Target for the bulls will be that round number, the top of the range and that range high. If we go up, waiting for the pullback. If we go lower, 1 try, 2 try, failure into hidden channel pullback. And again, if we run sideways here, right, 2 try, failure pattern, going back up again. And again, if you want to see hundreds of examples of those patterns on real charts, that way you know what they look like, all I can do right now is kind of draw the stuff up for you right now. But if you want to see great examples of that, make sure you invest the time in our free trading course. It's in the description. It's also upper right-hand corner here. Grab that information icon and register on our website. Let's keep going. For the Nasdaq now, over to the gold. Gold is range bound with a slight bear bias this evening. We have a trading range, a pendulum swing, a support trend line, and a measured move on the chart this evening. The trading range has a bear bias to it. You can see we get a long bear move down on Friday. And believe it or not, this actual range began at the end of the day on Friday. They then kind of picked up and ran with that range here in Monday's session. So we definitely have a bear bias to it because there was that bear move going into that trading range. What is a bear bias? What does a bear bias into a trading range tell us? Well, it's basically the exact same thing we talked about on oil, but the opposite direction. I want to sell high up here. What I want to do is I want to use the 2-try rule. 1 try, 2 try, and then back down we go. Again, let those buyers try once, let those buyers try twice. Once we know they're all fully invested in this move higher, now we can pull the plug, right, and sell into those buyers' stop losses. At the same time, if we can run lower here, we've got that beautiful target waiting down at that 96 even. So we got that strong move down. That gives me the bear bias. That puts me now into a trading range. I have 1 try, I have 2 tries, and now we have those sellers, right, running back lower. Now we can easily see momentum now is pushing prices lower back into that trading range. I don't want to trade the middle, and I don't want to trade at support, right? I want to sell at resistance. So watching this support line come in, this is definitely keeping me concerned. I don't want to chase after this market right now. So what I'm going to do is I'm going to look for another shot here now at another 2 try, right? 1 try, 2 try, get that failure, and we'll see if we can get another round here. If not, we've got to go through that trend line, come back, and use that trend line now as resistance on the opposite side. This could be a little bit tricky here on the gold. So basically, bear bias, 2 try rule here, 1 try, 2 try, back down in, right? If we can go back down to retest that low, again, 1 try, 2 try, back down in. If we can push through it, I can use the underbelly of that trend line. Just make sure you get it as close to, right, the high of that range as you can. And then what's likely here right now is we get back down, one try, two try, and then right back up again. So that's going to be the plan, looking for the buy going back up into that range. So I don't want to sell into support. I want to sell at resistance. I've got my eyes on some prior swings up here, right? I want to use that measured move. I want to use that range expansion level as resistance. So let's get back above the moving average. Let's look for those buyers to fail. Buyer failure for the run back down, pullback pattern off that trend line, and then we can look for that one try, two try, going back up into that range tomorrow morning. So again, it's the two try rule failure for the sellers. It's the breakout pullback pattern for the sellers off top of that range. Don't even try to sell the low of that range. Wait for those bears now to try once, try twice, and then once they fail, we'll then look for those buys going back up into that range. Now, what would a breakout look like, right? How do we break out below that range, and how do we break out going higher? Well, breakout going higher is actually pretty simple. We've already got this first leg up. So if we can get another strength pullback, strength going higher here, I'll have no problem calling this a bull market. We know where the buyers want to go at that point. They're going to want to go back up to retest that 15.8. The difficult part now is going to be to find the entry. What I'll do is I'll find that new channel, I'll bring that channel up, and we'll look to buy off the low of that channel. I'll also look here, of course, to try to get that level of support off that high, right, and buy off that level of support as well. Remember, prior resistance levels will become support levels as well. At the same time here, if we do see that strong move higher here, I'm also looking for something like this as well. So don't be surprised if it really runs. We can draw a little bit wider channel, a bit steeper channel there, and look for the pullback there, right? So all of those will play in tomorrow. But again, it all starts with a strong move higher, right? A strong move higher. Don't even think about buying this if it just runs back to the retest that high. It'll have to run up, pull back to that moving average, and really show us some strength going higher. At that point, I'm watching that 08.8 level as support, looking for that to be a buy, right, in combination with that new channel, right, coming off those two new highs. I'm also watching to see, right, where that larger channel would be too, finding that channel, right, and then looking for that buy later on, right? It all depends on what the move looks like and then how the market wants to pull back, whether or not we get the setup off the small channel or off that larger channel. So that's if price goes higher here. If price goes lower here right now, remember, we really got to get through these lows. So again, we're trying to sell high for a target going back down to those lows. I don't want to sell down here, right? Because there's a range, and I don't want to sell the low of the range. So what I really have to do is I really got to get that strong breakout going through the low of this range here. If we do end up back down, I've got to see a strong break through that range. And if that's the case, we'll find our new channel. We'll sell the high of that channel, and we'll look for that continuation, right, going lower. As I zoom out on this chart, right, it's easy to see here we have a big range low, not too far below that range. So it's going to be tricky down here as we go lower. So just kind of looking at the big picture here right now on gold, it's not going to be easy to get this price to go through this low. So be very, very careful as it goes lower. That's why I said earlier it's probably tomorrow going to be, right, a one try, two try, sell back down, one try, two try, buy back up. I just don't see at this point there being enough momentum. Because again, you look left here and you can easily see this range, we're right there. So even if we do break to the downside there, it's going to have to be a lot of strength down there to have any real confidence that we should be selling down there. So I'm looking to buy the low, looking to sell the high, looking to use that two try rule. A great looking chart there on the gold. And then wrapping up tonight here on the euro. Boy, that euro really got moving here today. The euro is range bound with a bull bias this evening, and we have a trading range, a hidden channel, right, and a reversal line on the chart this evening. The trading range is a bull bias to it, right? Trading range, this of course goes back to last week. Trading range has a bull bias to it. You'll notice we took that trading range, we copy and pasted up, that acts as resistance. copy it, paste it down, and look, that support down here hasn't been hit yet. So there's a big bullseye, a big target right on the low of that range expansion. And again, this stuff is not that difficult to learn. You take that trading range, you copy and paste it up, that acts as resistance, you copy and paste it down, that acts as support, and that support level down here, 17,900 and change, hasn't been hit yet. At the same time, right, with the bulls in control, I want to find levels of support, right? I want to buy below the low of the range, and I want to use those support levels. So what support levels can I use? Well, we drew up those two highs. That brings me up to a channel, right? That creates support. At the same time here, if you look left, right, there's a ton of support off of these two levels before, just shy of that 18,100 area there. So this whole area here really, this whole area here is very enticing here for these bulls. And again, also too, you can see the amount of the move above that range, the amount of the move below the range, that lines up here. So a lot of support levels. I've got my pendulum swing up, my pendulum swing down, that creates support. I have that reversal line, that creates support. And I have this hidden channel, that creates support. Heck, I've even measured this pullback, right, to find another layer of support there as well. So lots of support levels down here. There's one big clue though, and that is momentum. Here we have a very strong momentum coming off the high of this trading range, right? Pretty simple idea, right? When the market starts moving with momentum, it's very difficult to stop. So what you can almost always expect is, and we saw a good example back here, anytime you see a strong move off the highs, even if it's a bear market overall, you're still going to want to wait for that second leg through. Okay, now I have a rule, anytime I see that much momentum, I'm going to wait for that pullback to the moving average, and I'm going to let them try a second time, right? That's a kind of a variation of the two-try rule. If the market has a lot of momentum, then we have to respect that two-try, because anytime we see a strong move in one direction, you're probably going to see another leg going lower. And so I would expect to see almost a repeat of what we saw basically at the end of the day on Friday. We had that strong move down. That momentum told the bears to sell that pullback. So strong move down, waiting for that pullback to the moving average. I would assume you're going to see one more attempt to go lower. Then we'll look for that seller failure into strength, strength into hidden channel pullback, and hidden channel pullback back up to retest the highs. So the big moral of that story here tonight is let that momentum exhaust with one try, two try. We already have the first try down. So wait for it to pull back to that moving average. Wait for those bears to sell off the moving average. I'm not saying to sell the pullback here. I'm just saying I'm going to wait for those bears to try to sell that pullback. Then as we go back, we'll probably see another attempt for a failure here at the moving average, just like right there. And we can look for that break going higher from there. Again, this is all about momentum. When the ranges are really wide like this, or we see the market rotating off that pendulum swing, that momentum gets going pretty good. And you don't want to try to stop that freight train just because there's a level of support there. Expect that two-try rule and wait for that second try. Then we'll look for that buy going back up into that range. Now, there's also potential here that maybe that momentum dries up. Maybe we get sucked into this range here. So if that's the case, this game plan will change a little bit. If we don't pull back, right, if we keep going here, that will tell me momentum is strong, wait for the second try, and then back up, right? If we just see it go sideways here, right, that will ultimately, think of like a freight train slowing down slowly, right? You can't stop a freight train. If that momentum comes crashing down, you can't stop that. Right? You don't want to stop it. Let it go one more time and then go, right? But if we slowly hit the brakes here and slow down, now that momentum isn't as dramatic. Now I can be a lot more aggressive. One try, two try, buy back up. And again, I'm trying to go below the range. I want to buy off support. I've got those support levels waiting for me below. All right, now, what if we go higher here? right? How do we go higher here? What would a breakout look like? Well, again, just a strong move higher doesn't guarantee a breakout. We can already see that evidence, right, twice already. So if we do see a strong move higher, that's wonderful. I'm not interested so much in selling this market because it's a bull market. I'm going to have to wait here patiently and see if we can get this thing to go through that high. If we can get through this range expansion level around 18,800, I'll feel a whole lot better at finding a new channel, buying the low of that channel, and we'll probably be able to use that prior level of resistance as support, right? And so that's a definite plan of attack tomorrow if we can get that strong enough breakout through this range. And of course, don't forget, last but not least, what does a reversal look like? 1, 2, 3 reversal. 1, 2, 3. It's going to have to be strong. It'll have to clear below that battle zone. If we can get that 1 strong move down, 2 pull back to the moving average, and 3 strong breakthrough. Again, look back here. You can see a strong move down, a pull back to the moving average, but they couldn't finish, right? And that's what told us, that's what tells you to keep buying that low. 2 try rule, buy that low. Strong move down, pull back to the moving average. Again, I would love to think this thing will be through that battle zone. Once we see it through, then we can look for that new channel. We can look to sell, right? And of course, targets at that point now are back down to retest this low at 17,300. But I believe we have an even bigger target down there. Yeah, so we get another leg lower here. 17,000 makes for an easy target if these bears can take control. So we'll play it by ear tomorrow. We know we're bullish right now. I want to be a buyer off the low of that trading range. Looking for that 2 try rule. 1 try, 2 try, then back up we go. If we sit inside that range, don't take the bait, wait for it. 1 try, 2 try, back up we go from there. If we do run higher, make sure we get that strong breakout before we try buying pullbacks, or 1, 2, 3 reversal, and we're selling off the high of that channel for that move back down around that 17,000. So lots of great opportunities setting up for tomorrow's session. But remember, I'm just giving you the strategy. And I'll tell you right now, I could give this strategy to hundreds of traders and they still wouldn't use it to make any money. You know why? Because there's one thing I can't give you every evening on this newsletter, and that's between your ears, what I call the trader's mindset. Being a successful trader means strategy, it means skill sets, but it really means the mindset, the discipline, the patience, thinking like a trader, thinking in probabilities, buying low, selling high, right? And again, disciplined and patient professional traders, right? They develop that trader's mindset. That's the big benefit of our trade room. Our trade room opens up as part of our advanced course every morning at 8 o'clock Eastern time, and that's where I teach my strategy. I help lay the groundwork for the proper skill sets, and again, I help develop that trader's mindset. Among everything else, being with me every day in my trade room means you're going to know exactly where the best of the best trades will be every day. Now, want a free pass, free trial? I got a great free trial to come test drive our trade room, come learn our trading strategies, and learn everything about being a client. You can grab that free trial right on the homepage of the website. I'll put the links in the description of the YouTube video. While you're here, don't forget, I'm always here to answer all your questions. You can call that toll-free number, use that live support on the right-hand side. And as always, I look forward to seeing you tomorrow morning in the trade room. We open up at 8 o'clock Eastern time, and we'll execute this strategy together. If you have any questions, drop those questions in the comment section below. Use my live support tool or pick up the phone, right, and call me toll-free anytime you need my help. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.